Bob Shanks.
Hey, Bob, Joel Elconin and Dennis Dick from Benzinga's Pre-Market Prep. How you doing this morning?
Good. How are you?
Good. Thanks for joining us. And big day for Ford here. They announce Q1 earnings. Could you just give us a little review of the numbers?
Sure. We came in with a pre-tax profit of $1.4 billion. It was pretty flat compared with a year ago, up $24 million. We came in with an operating EPS of 23 cents. That was down a couple cents, and that was largely due to a higher tax rate. And in terms of profitability, on the very bottom line, net income, $924 million, and that was off slightly again, a tax rate difference versus last year and the non-repeat of a special tax item that we had a year ago. But overall, the quarter pretty flat, whichever way you look at it, versus a year ago, but very much in line with what we had expected and consistent with our call of a breakthrough year, which is based on very, very strong performance in the second half of the year based on product launches and new capacity coming into Asia Pacific around mid-year.
Talk about those product launches, Bob. What do you anticipate here in the second quarter and towards the end of the year?
Well, one of the most important ones is obviously the F-150. We are completed with our launch at Dearborn, and the plant's up and running at its normal production rate. In Kansas City, we've launched and are well along the acceleration curve there, but we still have probably just a little bit to go. But when we get out of the quarter, F-150 will be running at full rate. And just to give you a feel about what that means, in the quarter, our F-150 wholesales were about 40% lower than they were a year ago. We're also launching the Edge in Canada, and that has gone well. But in the quarter, we had wholesales that were down about 50% for that product. If we had built both those products at normal production rates in the quarter, we would have earned an incremental $1 billion+ of profitability, and our margin in North America, which came in at 6.7%, would have easily topped 10%. So it just gives you a feel for the impact of the launches and what we would expect, as we get into the second, third, and fourth quarters of the year in North America. We've also got Explorer coming. We've got MKX coming on the Lincoln side. And in Asia Pacific, we've got a new plant launching in China where we're going to build a 3-row version of the Edge, an all-new Taurus that we just showed at the Shanghai Motor Show. And in India, we've got a plant that's going to be opening at mid-year, and it's going to build a new small sub-B car called the Figo. So a lot of activity. There's other things coming I didn't mention, but I mean it's just a really, really full year with launches across the world.
Electric vehicles in the pipeline, satisfied with the Focus results?
Yeah, we're very satisfied with with all of our results. If you were you talking about the Focus product line?
Yes.
Yeah, and the Focus product line in the U.S., we actually just announced that we were going to be taking a crew off of our Michigan assembly plant where we build the Focus and the C-Max. What we actually are seeing there, the share contribution of those products in the first quarter was the same as it was a year ago. What we're seeing is a continued shift of consumer preference from cars, and particularly small cars, into utilities, and particularly smaller utilities, both mini utilities and small utilities like the Escape. So that's a trend that we've been seeing for quite some time, and it continued in the first quarter of this year, and we would expect it probably to continue, in the periods ahead. And that's good for us because we're very strong in utilities, and in general, manufacturers make better margins on utilities than they do sedans and hatchbacks.
Just talk about electric vehicles in Tesla. I mean, big perceived competition from them farther on down the line?
Well, Tesla at the moment is still a niche player. They have aspirations to be more than that, but that's where they are today, and they're very, very high priced. So not a direct competitor to Ford at the moment. I mean, the thing that's concerning is that the mix of electrified products, so that would be normal hybrids, plug-in hybrids, and battery electric vehicles, is actually not going anywhere. And particularly with with gas prices coming down, the demand for those types of vehicles is just isn't moving. And for all of us to meet the regulatory requirements that we've agreed with the government in the years ahead, we're going to have to see a much greater take rate for those types of products in the years ahead. So something for us to continue to work on, and with the government in terms of where we might be heading in terms of regulatory requirements, but that's probably one of the areas of concern that that we're seeing in the present performance of those types of vehicles.
Bob, what about the strength in the U.S. dollar here? I know it's come off a little bit here recently, but do you see any more currency headwinds here, and how are you guys dealing with those currency headwinds?
Well, that's an interesting one. We clearly saw in the first quarter an impact on revenue because there you're just translating the revenue of your international operations, with a stronger dollar. So therefore, you're going to take a hit on the revenue side of the equation. But on the bottom line, we actually picked up good news on exchange in the quarter. Now, most of that was the non-repeat of some unfavorable balance sheet adjustments we made a year ago in Argentina and Venezuela that didn't repeat. But even if I put that to the side, the effect of exchange on the company's bottom line was pretty muted. So as we go forward, I think it'll probably vary up and down, but probably not to the degree that would be a material impact on the company as a whole. And that might have a different effect on a particular region, but it doesn't look like it'll have a huge impact on the overall company on a bottom line basis.
I know we're running up against the clock here, but I just, one final question. You seem to have some optimism for the second half of the year. Where do you think that strength is going to come from to, perhaps have a better performance for the remainder of the year?
Yeah, that strength is going to come from the new products that we talked about launching and having the full effect of that in the second half of the year, as well as the added capacity in Asia Pacific. So I'd have to say that the drivers of that strong second half and the full year will be North America and Asia Pacific on the basis of the products and the capacity.
Bob Shanks, Chief Financial Officer and Executive Vice President at Ford Motor Company, joining us here on Benzinga's Pre-Market Prep. Bob, thanks for taking the time out from your busy day to join us, and we hope to have you on again.
Thank you.
Thanks, Bob.